All right, it's Blake here, Forex Money Flipper. Thanks for tuning in. This is from my last video, but I want to talk about it real quick. This is a video. This is a website, website that you can visit, babypips.com. This website will get you started beginning with your education, your basics, and everything that you need to know from basic to advanced, as far as that goes. But always important to have somebody explain it to you also, or just learn it yourself the long way, the hard way. Okay. Um, Now, this is the website that you need to do to go to make an account and then make a demo account. Okay, demo. I wrote demo all over the place on this one. Uh, um. Okay, so the two pairs that I focus on are mostly GBP USD. Okay, and sometimes I'll try my luck on GBP JPY. Okay, so now time schedule, we're talking EST, Eastern Standard Time, which is New York time zone. Where the New York Stock Exchange opens at 9 a.m. Eastern Standard Time, so that's East Coast. Um, so now when you're dealing with a pair, you gotta understand when you're buying this pair, you're buying this, right? The Great British Pound, and you're selling USD, right? And then like down here, when you're selling this, right, you're selling GBP and you're buying JPY. Okay, so understand that. Let that sink in. Rewind that if you need to. Okay, so British session opens at 3 a.m. Eastern Standard Time. Okay, so the New York Stock Exchange opens at 9 a.m. Eastern Standard Time. So what I'm trying to do currently is I'm trying to wake up at like 2 a.m. Eastern Standard Time and then trade from about basically 3 o'clock to uh, about 3 to 2, something like that. But really the work day is really like somewhere about like 2 a.m. to 2 p.m. Eastern Standard Time, because that's when the market's moving. You'll get a couple of big moves or a few big moves or maybe just one big move sometimes. Um, but yeah, you'll either get like a couple medium-sized moves, a few smaller moves, or like one really big move, and then like another like medium-sized correction or something like that. So um, now let's see. MetaTrader 5 is the one you want to use because MetaTrader 5 is going to be mobile friendly. So when you're trading on your phone, that's going to be the one you want to use. MetaTrader 5. Okay. Uh, do not trade live money. Do not trade live money. Okay, starting out. Uh, don't. Don't do it. You're probably going to lose it because it's a lot easier to lose money than it is to make money. Okay? So, uh, let's see what else. Alright, tradingview.com. That's going to be something that you're really going to need to use, especially on your phone. Okay, especially on your phone. It's a must-have. If you only have 2 apps on your phone, I don't care what else you have on your phone. If you only have 2 apps on your phone, then they need to be MetaTrader 5 and TradingView, the app. Okay, because that's going to be make sure you log in. You create an account. okay, because that's going to save all your chart data, all your lines, everything, okay. And actually, you can do what's really great about TradingView and using this is if you have a computer or you have access to a computer, right? You can log on and chart plot all your data, get all your indicators set up, and all your key levels set up, right? And then save it, right? So make sure you save your work, and then it's going to be there when you use the app logged into that same account on your phone. And anytime you log in, it's going to be there. So, all right, now it's actually a lot easier to make the video once I've got all this stuff up, because the first time I had the blank board and I drew all this as I was talking. So now since we're talking about TradingView, a couple of the things that I use for indicators on TradingView is I use something called harmonic patterns. And so when you see that there's a harmonic pattern, you have to check your different time frames to find them. Sometimes they're on the daily, or you'll find one on the 4-hour time frame, or the 1-hour time frame, or the 15-minute or the 5-minute time frame, or even sometimes the 1-minute time frame, right? I mean, obviously, because there's more movement. So, but I mean, I don't typically use the 1 minute. I think it's too much chaos. So, all right. Hopefully, you're following along with me. So I use the harmonic patterns on TradingView, and then I also use quarter levels, or quarters theory. This is what this is. This is quarters theory right here. You see how you start off with a whole number like 1.22000, and then you have this whole number 1.23000, and then you have a halfway point right here. So you have 1,000 points in between here and here. 500 points in between is 1.22500. So you see how that works? Okay. And then a quarter point, this is a whole level within the quarters theory, okay? Whole level, a half level, and this is a quarter level right here. So it's just 250 points up, and that's going to be your quarter level. And so it's 1 quarter to there, 1 quarter to there, 1 quarter to there, and 1 quarter to there. 2 quarters is a half level, and 4 quarters is a whole level. Hopefully you're following me, what I'm saying. Now, I don't want to confuse you, but there is, this is the 1,000-point block within the quarters theory, okay? So in quarters theory, there's a high time frame where you have major, like the biggest, usable time frames on the quarters theory is going to be your 10,000 point level. 10,000 point level would basically be if this was 1.20 and this was 1.30. 1.20,000 and 1.30,000. 1.20,000 and 1.30,000. And then this would be, 1.20 or 1.25,000. So there would be 10,000 points in between here, 5,000 points in between here, and then your quarter level, this would be your whole level, this would be your half level, and then your quarter level would be 2,500 points, okay, which is 250 pips, okay. So you take your points, take a 0 off to find your pips, which is percentage in points. That's what pips stands for. Percentage in points. So this would be 1.2. Let me get it right. See, 1.2500, and then 1. What's half of? I got it on my computer over there, but 1.2500, and then half of that would be 1.2500, Okay, you're keeping the 2, right? Okay. So then this would be 1.25,000, and this would be 1.22500. 1.22500. Okay. I know you're like, oh man, what did he just say? 1.22500. It's going to be super simple, super easy. All you really need to know is take a 10,000 block, like 1.200, okay? 1.2000 and 1.3000, and then divide that into half, and then divide that half into half, and then you get your quarter level, and you have your whole level, your half level, and your quarter level. Hopefully that makes sense. Now, basic kind of information. The charts are plotted on what is called candlesticks. So candlesticks is basically just showing you the price action, right? It's called price action trading. Some people call it that. Now the way a candlestick works is, just in case you're wondering what I'm drinking, that's good stuff. Now this is price action for a candlestick. So you have basically, so let me say it like this. So if you're looking at a 1 hour candlestick, okay? If you're looking at a 1 hour candlestick, then the smaller time frames, there'll be all this price data that made that 1 hour candlestick. Like there'll be price movement on the 5 minute that made the 1 hour candlestick what it is, right? So a candlestick on the daily is just a representation of all the price action for that one day. A 4 hour candlestick is all the price action that took place in a period of 4 hours. And a 1 hour candlestick is all the price action a 1 hour candlestick is representative, is all the price data plotted in a candlestick for all the price action that happened within a 1 hour period. You get what I'm saying? So a candlestick is just price action plotted during that time period, right? And then obviously a 15-minute candlestick is the same thing. All the price action that took place in 15 minutes, and a 5-minute candlestick is all the price action that took place in 5 minutes. So this could be whatever time frame you want. It doesn't matter. Use your imagination. But my standard time frame that I sort of just like default to in general is always the 1 hour. I just kind of always sort of, when I don't know what to do, I just go to the 1 hour chart, you know. And so that's what I do. So let's pretend this is a 1 hour right here. And price starts here. It opens here. And then it goes to a low. And then it goes to a high. And then it closes. So notice that the close is higher than the open. So it opened here. And it had a low. And then it went and had a high. And then it had a close, and because it closed above, that's why it's green. So think of it this way. It opened here, it closed here, right? And it went back to where it started, so it doesn't paint that. When it goes up, it paints it green. See? And then when it comes back down, it takes the painting away because that progress also went away. You know, you can think about it like that. Now, over here, on the other hand, this one, open here, went up to a high, went down to a low, and then it closed. See? High, open, close, low, but the left to right is open, high, low, close. Open, high, low, close. So that's the way to, when you're looking on the chart, that's how you're going to see it. On like MetaTrader 5 or TradingView, it's going to be open, high, low, close. It's going to be in that order, okay? In that order right there. All right. So make sure that you make that connection. This is the right order right here. Okay. Not that. Okay. Open, high, low, close. But anyways, so what happened was it opened here, and then it went up, and then it went down, and then it went back up to its close. So it opened here, went up, lost that upward momentum, and then went down. And as it's going down, it was painted red, and then it went to a low, and it came back up. It lost that progress, so it lost that paint. So then the only portion that is painted is if it goes down, it paints it red, right, and closes below the open. So it open, high, paint it red, close. Got it? Because open, high, right, and then when it went below the open, that's when it starts painting it red, right? Over here, open, low, and then when it goes above the open, that's when it starts painting it green, right? So it's important to understand the movement of price action that creates the candlestick, right? It's an important concept to understand, okay? So there you go. That is like one of the most important things, fundamental beginning for anyone trading Forex. So we talked about key levels, and this is price action, which are made up of candlesticks. And I wrote right here, the trend is your friend, okay? And that's very true. Always want to trade with the trend. JPY tends to trend, which is good, equals good, because the trend is your friend. So something you need to look at before we talk about how to trade is you need to look at and consider that basically the way that your mindset needs to think before you even start placing even demo trades. You need to start thinking in terms of, where's my stop loss? Where, if price turns against me, where am I going to put my stop loss, right? And that's something you think about in order to determine your entry, right? So you don't just enter anywhere. And there's a reason for this, obviously. This is not just important on your initial entry, but you'll see as you work the trend, it becomes also important still. It's still important through the whole, every position that you take, it's critical that you first identify your stop loss. Stop loss is where, when price hits that level that you set as a stop loss on your MetaTrader 5, also known as MT5, when it hits that stop loss level that you set at one of these numbers, or one of the numbers in between here, on the chart somewhere, when it hits that level, it takes you out of your position and you just lose. Either you lose money, or if you set it above your entry on a buy position, if you set the stop loss above your entry after it goes up, then you may make a little bit of money or break even. But if you set it below your entry and it hits it, obviously you lose money. Okay? But we want to make money. That's what we want to do. Now, the interesting thing about these levels is price tends to bounce up and down between these levels. Okay? Now, it doesn't always do it in a predictable manner, but it always does it. Okay? So price always bounces off of these levels. Always. Like I said, the thing about it is it doesn't do it in a predictable manner, right? But it is fairly predictable, right? So what I mean by that is it could start going up right? But it could just as easily go back down, right? So, for example, this one, you think, oh, it's going up, but this thing could turn around and go down. You get what I'm saying? Just because it got above here doesn't mean it's going to continue going up. It could just as easily bounce off another level up here, right? Like this. So say price was going, like this, right? It could just as easily bounce off of here and go down, right? But I just drew this as a guideline. Now, before I get into the chart, I want to talk about real quick. We could have done this later, but the dollar has its own index, which is independent. This is a currency pair right here, a currency pair. So this is an index, which is a single just dollar index by itself. Now, the U.S. dollar index is the average value of the U.S. dollar weighted against all the currencies that it trades with. The U.S. dollar index is the average value of the U.S. dollar weighted against all the other currency pairs that it trades with. So you have major pairs like GBP USD, Euro USD, USD JPY, AUD USD, USD CAD. You have NZD USD. You have all these major pairs. The dollar affects all those major, all the currencies that trade with the dollar on those major pairs. The dollar affects those major pairs, right? The dollar is the king. The dollar is the king currency, right? It's King Kong. It's whatever you want to say, but now, so when you get fundamental news for the U.S. dollar, that's the most important fundamental news there is, right? U.S. economic news, U.S. News that affects the dollar, right? Also, I want to say real quick that the price of oil or the oil supply will also have an effect on the dollar. So keep that in mind, and other things will have an effect on the dollar too. Stock market sometimes, or just some types of news or something, or some event. But the news that comes out for like the Great British Pound, it will also affect obviously this pair, but the effect on the dollar is not going to be much, right? So what I'm saying is the news for the Great British Pound, news in England and London, is not really going to affect the dollar that much, because even if the Great British Pound news affects this pair, guess what? The dollar also trades with the Canadian dollar and the Japanese yen and the New Zealand dollar and the euro and all these other things, the Australian dollar. Okay, so there's news coming out all the time in Canada, the Canada economy and the Canadian dollar and New Zealand dollar, and there's news coming out all these other different places in Japan and did I say Australia? But anyway, yeah, and then the Euro news and all whatever like that. Now sometimes the Euro news and the Great British Pound news kind of go hand in hand. Like if they get news on the Euro, it'll affect the GBP USD, and if you get news on the GBP, it'll affect the movement on the Euro USD. So yeah. So but anyway, keep an eye on these the dollar index and the Great British Pound index. If you're trading this pair, obviously keep an eye on the Great British Pound index. I'm not sure if it's called GBX or what it's called, I forget. You have to find it, but and then also Japan. If you can find it, I'll have to show you on my make a video on my computer and show you the ones that I use, so you can look at that. So maybe I'll do that video soon. But keep an eye on these indexes so that you see what's going on here. Keep an eye on fundamental news so you see what's going on. All right, so now I explained all that. Now here you have chart data. Okay, so now let me say this: the reason that trading is so hard, people look at a chart and they say, "Oh wow, that looks super easy." Okay. But the reason that it's so hard is because you can only see to this, you know what I mean? You can't see what's on the right side of the chart. All right? So we don't know what's going to happen really. We don't know really if it's going to go up or down or whatever. What we can know is historical price data, right? So you start off by looking at the monthly time frame, right? And then you go and you look at and you look at the monthly time frame and you look at the trend that's on the monthly. And I'll show you on my hair. Does it look all right? I cut it myself. Miami Dolphins hat. All right, so you want to look on the monthly Miami, Florida Dolphins hat. You want to look on the monthly time frame, and you want to look and you want to draw your trend lines. If it's a downtrend, you draw trend lines across the top, and you can draw, if it's a channel especially, you can draw an equidistant channel line, or if it's a little bit different, you can draw two trend lines, one on top and one on bottom. That way, if either one is broken, then it's a big deal, right? So then you want to do the same thing on the daily, or the weekly, the daily, the 4 hour, the 1 hour, the 15 minute, the 5 minute. And this way you can know, okay, on the monthly we're in a downtrend. On the weekly we're, in a downtrend, but on the daily we're in an uptrend, right? Or on the 4 hour we're in an uptrend, right? Because what will happen is you'll have a downtrend like this, and then you'll have a correction, and then it'll continue on down, then you'll have a correction, right? So like this, and you have a correction like this, and then a small correction, and then another correction like that. So this is more of an extreme correction, but it does happen, all the time. So, but you have something called a Fibonacci. See that little word I put there, Fibonacci? That's what it's called, Fibonacci. I'm not great at spelling sometimes. Fibonocci, Fibonacci. But you would draw it from your low to your high, and then this would be it's got certain levels, right? So your levels would be, right here I drew them like a 50 level retracement or a 61.8 retracement level. So this price, it went up, and then it bounced off of here, went down, it busted way down through here, and then started going back up. Now, price will, like I said, it will bounce sometimes between these levels, and then you have to watch. So draw these levels on your chart, and then look. Let me say this. Do not waste your time drawing all the levels on MetaTrader 5 on your phone, because I don't know if it would happen to you, but what happens to me is I will spend a lot of time drawing levels and everything, trend lines and whatever, on MetaTrader 5, and then randomly they will just disappear. So I don't know. I haven't tracked like what day they disappear. Maybe it's the first of each month. I'm not sure. I'll have to see. but all I know is that they disappear. So that's why I recommend using TradingView, the TradingView app on your phone, to see what the market's doing, and then, you know, you can just draw, you know, a few levels right there where you're at to kind of see what's going on. But, you know, really, you could just use your TradingView app, and then you can see your price levels right there, and then you can just go on MetaTrader 5 and place your trade, and then watch your trade from the TradingView app. That's where you're actually observing, right? But you actually you find where you want to put your stop loss first, and then your entry, and then your take profit. Now, I was talking about where you put your stop loss. So once you find out where you put your stop loss, so say you want to put your stop loss right here, whatever reason. But like for me, you know, in my way of thinking, I would think, okay, it's going to bust through here, and then it's going to come back down, and I'm probably going to put my entry. I'm probably going to look for an entry on this level, because for me, I can't believe that it would come back down here. So some people would put an entry on this 500 level. But me, I know that GBP USD, it's all over the place, right? It moves quick, it moves fast, and it moves a lot. So I would probably, you know, and here's the thing: you're not always going to get an entry this way. So you can't be greedy, because greed is where an eagerness and fear of missing out. That's where a lot of big money and institutions make their money. That's how they take money from. They use that fear and greed and everything that retail traders have. Retail traders like us. These institutions and these big money players, they use that fear and greed that we have against us to stop us out and to take our money and to make us liquidity, to turn us into liquidity. And liquidity is a concept that is basically means, you know, in order for someone to buy, they need someone to sell to, right? So if a bunch of people take entries right here, you see where I circled these? And then what will happen is there's these people called market manipulators. These market manipulators have a lot of money, and they can move the market to their advantage. So they take the money that they have, and then they buy and sell strategically. They strategically buy and sell in order to manipulate the market, in order to manipulate the psychology of retail traders, so that they can, you know, either incite buying, and then or to incite selling or liquidating of these positions. So if somebody has their stop losses down here, what these market manipulators will do is create selling, or they will sell to all these people so that the market doesn't go up, so that eventually it wears out and goes down and takes out this liquidity here. And what happens when these buyers get stopped out and their positions are their buy positions, their long positions are liquidated, they become sellers. So when buyers get stopped out, they become sellers. Okay? So when everybody that's buying here gets stopped out here, they become sellers that then the big money can get in there and buy from and have that liquidity to really drive the market up. And so this is a trend line, and I have two charts drawn on here. First one was this one, and then I went and I drew another one on top of it, so it's a little bit messy. But and I want to talk about also using multiple time frames, so I don't forget to talk about it because I don't really have it written on here. Multiple time frames in MetaTrader 5, you have an option to set these things in a vertical view. So if you go up here on your website or your phone somewhere in the options. No, not on your phone. Not on your phone. It won't do it on your phone. So you have to use this method. You have to have a computer. But you can also do it from your phone. If you do it from your phone, you're just gonna have to, I don't know, maybe screenshot all the time frames so you can kind of scroll through and compare where you're at in that moment. But it's going to be more difficult for you. But, you know, it's important regardless of how you do it. It's just important to know, okay, regarding the stochastic oscillator, the stochastic oscillator tells you when a market is oversold or overbought. So when the stochastic oscillator is up high, it's overbought, right? When the stochastic oscillator is down low, it's oversold. And if it's oversold, it's due to go up, or it's a strong market and it will continue going down. If it's overbought and it's up high, then either two things. It's either due to come down because it's overbought, or it means it's a strong market and it'll continue going up. So you just have to be careful when the stochastic oscillator is up high. You have to be careful about buying because it might correct itself, and that's why you have to keep in mind on the monthly, on the weekly, on the daily, on the 4 hour, on the 1 hour, on the 15 minute, on the 5 minute. You have to keep in mind where the stochastic oscillators are on all the time frames. Okay? When they line up, when all the stochastic oscillators line up on multiple time frames and they're all overbought, right here, you see what I'm saying? When they're all looking like this, then that's what you want to start looking for. Looking for sell opportunities, especially if you get a bearish candlestick somewhere. You know, like this. You get a bearish candlestick like that. I don't know if that's like the best. That would be more like a tombstone there with a nice big wick. That would be like what you're looking for a sell, and then boom. So also called a kangaroo tail, some people call that, or a tombstone. But anyway, whew, that's a lot of information. Yeah, so moving averages is also something you can use, and then volume. But that's a large topic and stuff. You know, moving averages, basically, you want to have multiple moving averages and then just watch like which way they're going, and then watch for crosses on the moving averages. And then volume, when the market's going up, you want to have higher volume on an uptrend to confirm the continuation of the uptrend, and then lower volume on when it goes down to confirm that it's probably going to go back up. So, and then vice versa on a downtrend. It doesn't need a lot of volume to go down because well, it just, you know, the market, it just falls on its own weight is kind of the thing. Like if there's no buying interest, then it's just people will just start liquidating their positions and eliminating risk from their books by just closing their positions. Like, it's called a risk-off environment when people are just dumping their positions. You know, when the market is just going down, right? That's when people are not wanting to have their money in that particular asset, you know, But if it's going up, then that's called a risk on environment, which means people are willing to risk buying that because they think it's going to go up, right? So I'm going to kind of wrap this video up, but it's important to know your lot size and what works. So for a $100 account, you want to be looking at like 0.1 lots, you know, and then you want to look at stacking those 0.1 lots on your way up. So from so a 0.1 lot from here to here that's going to be $100, and then from here to here, that's going to be $50. So 50 pips, you get $50 on a 0.1 lot, and then 100 pips, you get $100 on a 0.1 lot. So see, I put 0.1 here, 0.1, 0.1. So that's your lot size. See that? So a $100 account, you want 0.1 lot. Okay, but yeah, so a lot of time what you can do is wait for the market to take liquidity before you get in. So you're looking at where's everybody else buying, where are most people buying at, right? Where's most of the buying occurring, right? And then just wait. And it may take a long time, but eventually what the market might have to do. Now here's the thing, if the market's trying to go up, but it can't, then you can expect a maneuver to take out liquidity if the path of least resistance is up and they want to go up and the sentiment is bullish and the economic news is bullish and everything like that. Right now, because of what the Fed is doing in 2022, summer 2022, most assets are in a downtrend. Most assets it's a risk off. It's you know, it's a bloody thing, you know, because everything's red, you know. So red is when it goes down, green is when it goes up. So, but anyway, you can look where everybody's taking their positions and then wait for that liquidity to get taken out. Boom, then you make your entry, and then it sweeps up and goes up like crazy, and then you take your profit at a major level like this. Always take your profit at a major level like this, and the more major the level is, like, it's important to take profit here, but if it was say like a 1.25 or a 1.20,000 or a 1.30,000 or a 1.25,000, it's very important to take your profits because you don't know what's going to happen at that level. It may go down, it may go back up, and you just want to take your money and go home. The key here is to get paid. Let me tell you this. Now, listen to this, okay? If you do not take your money, if you do not take your profits, someone else will. Okay? Do not get greedy. Do not get greedy. Okay? My name on YouTube is called Forex Money Flipper. Now, before I've taken live money, real money, I've taken, $100 and I turned it in. I'm not bragging, I'm just saying. I turned it into $1,500. So I know that there's a huge thing for making money here. But sometimes you have to be happy with just flipping it to 200 or to 300, right? And not get greedy. Because I think my problem when I lost all my money was I got greedy. I got too big thinking, too high-minded, too expecting too much, out of the market. Like, ideally, let me say this, in a practical